Thanks for tuning into Business Daily. I'm Lee Ji-yoon. We have a lot of stories lined up for you today, so let's get started with a look at the day's highlights. Financial authorities launch a probe into Hanmi Pharmaceutical on whether an announcement last week of a contract termination with a German partner was delayed intentionally for insider trading. Last week's decision by Opec to cut output has led to a surge in oil prices, and we take a look at what this may mean for Korea and the global economy. These stories and more coming right up. But first, Korea posted a current account surplus of slightly over $5.5 billion in August, continuing its record surplus streak for 54 months. The Bank of Korea says the preliminary surplus was the lowest figure in 4 months, down more than $3 billion from the previous month. The central bank attributes the relatively low surplus in August to falling exports coupled with a rise in imports. Outbound shipments in August fell 3% on year to just over $41 billion, while imports edged up 0.6%, coming in under $35 billion. Korea's central bank governor Lee Ju-yeol says he expects consumer prices to grow 1% this year. The figure is lower than the BOK's previous prediction of 1.1% released in July. Speaking at a parliamentary audit, Lee said his prediction is based on the ongoing oil price slump and a temporary discount on electricity offered to households during the summer months. He also noted that it's highly likely that the U.S. Fed Reserve will raise its base rate in December, but said the hike will not immediately lead to higher interest rates here in Korea. He said the central bank will monitor the markets and economic conditions before adjusting the country's monetary policy. Shares of Hanmi Pharmaceutical continued to plunge, closing down over 7% on this Tuesday, following allegations that it deliberately delayed an announcement on a contract termination last week. And now authorities are looking into the possibility of insider trading and other misconduct. Our Kim Min-ji has the details.
Traders short-selling shares of Hanmi Pharmaceutical are estimated to have made profits of over 20%. According to the Korea Exchange, shares of Hanmi Pharmaceutical fluctuated by as much as 23% on Friday, meaning short-selling traders could have made profits of roughly $135 per share. Short-selling refers to the sale of a security not owned by the seller or that the seller has borrowed. If the share price declines, the security can be bought back at a lower price for a profit. Hanmi Pharmaceutical has been under fire for filing good and bad news that's caused its share price to shoot up quickly and then plunge. After the markets closed on Thursday, Hanmi announced that it had signed a $910 million contract with Genentech to license an anti-cancer treatment, with shares jumping 4% at Friday's open. About half an hour later, markets opened. The company announced the termination of its contract with Germany's Boehringer Ingelheim, causing shares to tumble more than 18% by the end of the day. Another question here is whether the company informed some investors about the negative news to come, giving them time to unload their shares. In Korea, listed firms are required to make new announcements or corrections using a system run by the Financial Supervisory Service. Korea Exchange officials then review the information and approve disclosures. However, Hanmi Pharmaceutical didn't disclose the information about the Boehringer Ingelheim deal right away and instead waited until the next morning. The company has apologized for the delay, saying it put the announcement off so that it wouldn't cause confusion with regard to the disclosure about the Genentech deal. The Financial Service Commission and Korea Exchange launched a joint probe into Hanmi on Sunday to see whether it violated the rules for fair disclosure. In separate news, the nation's drug ministry upheld its approval for medication for terminally ill patients with lung cancer. Back in May, Hanmi had received partial approval for use. Kim Min-ji, Business Daily.
The percentage of economically active Koreans in their 20s has risen to a 10-year high of almost 66%. Now, that might sound like good news, but that's not exactly the case, as that number includes unemployed young adults. Statistics Korea says the economically active includes people with jobs and those actively seeking employment and not in school. The number of 20-somethings declared as unemployed in the April to June period rose 7% on year, while the comparable figure for those with jobs only edged up 2.4%. We saw a number of key economic indicators released for August, and experts say that the figures are worrisome. Some go as far as comparing levels to the Asian financial crisis, which crippled Korea's economy in the late 1990s. Our Lee Ju-young has more.
Could Korea's economy possibly be backtracking to levels seen during the Asian financial crisis? Some economists think that may be the case, based on August figures released by the country's statistics office. For one, youth unemployment stood at 9.3%, reaching the highest August figure since 1999. The number of people unemployed for 6 months or more also saw a sharp increase to 182,000, making up almost 20% of total job seekers. On top of that, the manufacturing sector, which has been the country's main growth engine, is also losing steam, with 3 out of 10 companies having halted operations in the second quarter. That's the lowest operation rate since 1998. Fully aware of these concerns, Finance Minister Yoo Il-ho stressed that the economy is not in conditions similar to the Asian crisis, but he did say Korea is confronted with a number of uncertainties and faces the risk of repeating Japan's past mistakes. Experts say the 5-year-long economic slump has been taking a serious toll on consumer sentiment, and that the government should focus on creating quality jobs to improve spending by households. They also add the government should avoid going to extremes in corporate restructuring, as this may dampen sentiment in the private sector even further. Lee Ju-young, Business Daily.
So just last week, we reported on a surprise agreement from OPEC nations to cut oil production, giving sagging prices a boost. But why would higher prices at the pump be good for Korea? The price slump over the past few years has given the country a breather from high import bills, but it has also led to a slump in exports as emerging markets struggle with a supply glut and weaker global demand. With that, let's take a look at how the latest OPEC deal will affect Korea and the global economy.
2 years ago, global oil prices started to plummet as producers pumped at record levels to secure larger market shares, creating a supply glut in the overall market. Prices dropped from as much as $100 per barrel to $30 early this year. And although prices have rebounded slightly to the $40 to $45 range, they continue to weigh down the global economy, with overall demand still at paltry levels. In response to protracted low oil prices, OPEC announced it reached an agreement to cut back on output with hopes of lifting prices back up. Immediately after the announcement, crude oil prices jumped 6% to around $48 per barrel. So are we finally going to see an end to the era of low oil prices, and will this help get the global economy back on track?
And for more on this, Professor Yang Jun-suk from the Catholic University of Korea joins us in the studio today. Great to have you here.
Happy to be here.
So first, let's talk about why a rebound in oil prices may be good news for the global economy. I mean, how have protracted low prices affect the economy in recent years?
Okay, well, the biggest factor, I think, is the low oil prices contributed to very low inflation or even deflation in some countries. Now, that has made the central banks keep the interest rate low, which is usually a very active type of a monetary policy. But for some people, I think that because that type of expansionary monetary policy has been going on too long, it's problematic. Now, another problem is that because of the low oil revenue, a lot of countries which produce oil has gotten into trouble. Venezuela is the worst case. It's actually undergoing a very bad hyperinflation and economic crisis right now.
Okay.
But also the other oil-producing countries are also having their own problems. And then there's the related industries like the petrochemicals, shipping, and shipbuilding have also blamed part of their problems on the low oil prices. Some people feel that the higher oil prices will contribute to recovery of the global economy. I personally have some doubts because this is not a demand-led price increase, but supply cut-led price increase.
Now, what would you say then is a healthy price range for oil?
Okay, well, nobody's really sure. Economists always say that wherever demand and supply meets, that's the best price for anything. But if you look at sort of the historical background, if you look at, say, when the global economy did well, about 1985 to 2008, then usually the oil prices were actually around 20 to 40% range US dollar if you took account of inflation.
Okay.
So actually, I think the oil prices closed at $49 per barrel yesterday. So actually, we're higher than what the price usually was during the good times.
Now let's shift our focus to Korea then. How would a rise in oil prices affect the Korean economy? I mean, what sectors would benefit the most from this rise in prices?
Okay, I think the sector which gets the most out of this would be construction.
Okay.
Now, we talked about how oil prices have hurt oil producers. Their government revenue does not depend on taxes. It depends on oil revenue. And some countries, most oil-producing Middle Eastern countries, said that they need something like $80 per barrel to have government surplus. Countries like Venezuela and Iran said they prefer something like $100 a barrel. So because they're in a government deficit, they haven't been taking a lot of infrastructure projects or so on. And Korean construction industry has been going into trouble because of that. But perhaps with the increase in oil prices, Korean construction can go back into Middle East and do some construction projects. Other industries in Korea which may be benefit by this is petrochemicals, at least for the first few months. They bought a lot of stock at a very low prices, and if the global prices rise, then at least for the first few months, they can take advantage of that price differential. Now, shipping and shipbuilding, as I mentioned before, some people blame low oil prices for problems that industry is in. And they hope that the increase in prices will help those industries recover. As you know, Korea has a lot of problems with shipbuilding and marine shipping.
Right.
But I personally have my doubts because, again, this is supply cut-led price increase. So shipping volume should actually decrease unless this price rise somehow sparks a global recovery.
So you're saying this is good news for oil producers, but you don't really believe that this positive momentum will be shared by others.
Right, because, the reason that I think the oil prices are so low is because the global demand is low. And now, if this recovery was demand-led, so that people foresaw that perhaps the global slowdown is slowing and demand will increase in the future and the prices rise, then that's actually very good news. But this price rise is actually caused by cut in supply. So in the worst case scenario, we would still have low demand, except we would have high oil prices. And that would lead to more higher production costs. For Korea, it may lead to more trade deficit. So I don't see that much of a good news in this particular announcement.
But then because of such low oil prices, Korea's current account surplus has been hitting new highs. So do you think we'll see an end to that if we see a rise in oil prices?
Potentially. You have to remember that even though the government said that trend of falling exports may be ending, the exports have not been doing well. The global increase in trade is expected to be very low this year and next year. And one of the reasons that Korea was able to maintain a trade surplus even with falling exports is that the oil prices have been so low.
Right.
So if oil prices rise high enough, then that could potentially affect current account and trade account. It will definitely reduce our surplus, may even increase the deficit.
Now, this OPEC deal was a preliminary deal, and experts are saying that effects from it may be limited. And there's, of course, a ways to go until this deal is actually finalized, right?
Right. There's several details that have not been worked out. For example, I think they agreed to reduce the output by something like 700,000 barrels per day.
Okay.
And because the global output is currently 33.5 million barrels per day, 700,000 barrels per day is not really very much. It's about 2%. And then it's the OPEC countries which have agreed, not the outside OPEC countries like Russia and the US, which are very large oil producers themselves. And then even within the OPEC countries, they apparently have not yet decided. They decided on overall production, total production, but not how will be divided within each member. So that deal can fall apart when they try to work out the details in November. And as I mentioned earlier, because the demand may not be there, even though the supply will be lower, if the demand is not there, you may not see that much of a price rise.
So we'll see where this deal goes from here on out. Thank you so much for coming in today.
Thank you.
And that does it for today. But we'll be back tomorrow with more business news that matters to you. So don't forget to tune in then. Thanks for watching and see you soon.